Every major currency collapse in history followed the exact same 8-stage pattern. And what if I told you that the US dollar has already completed 6 of those stages? This isn't speculation. This isn't fear-mongering. This is pattern recognition across 4 centuries of monetary history. From the Roman denarius to the French assignat, from the Weimar papier mark to the Zimbabwean dollar, the script never changes. Only the actors do. And right now, in real time, we re-watching the world's reserve currency execute stage 6 of an 8-stage death spiral that has never, not once, been reversed. Let me show you the architecture of currency death. It's a precise, predictable sequence that plays out over decades, sometimes centuries. Once you see it, you cannot unsee it. Stage 1. The gold standard era. A currency backed by physical metal. 1 unit of currency equals a fixed amount of gold or silver. This creates natural discipline. Governments cannot simply print money without limit because every note represents a claim on actual metal in a vault somewhere. This stage is characterized by relative price stability, public trust, and limited government expansion. Stage 2. The crisis that breaks the link. Something happens, a war, a financial panic, a depression, that creates unbearable fiscal pressure. The government faces a choice: accept defeat or break the gold link temporarily. They always choose the latter. They always promise it's temporary. It never is. Stage 3. The fiat transition. The currency is now backed by nothing except government decree and public confidence. At first, this seems liberating. Spending increases. Programs expand. The economy appears to boom. The architects of this transition are hailed as visionaries. Stage 4. The debt acceleration. Without the discipline of gold, borrowing becomes the primary tool of governance. Deficits that would have been unthinkable under a gold standard become routine, then enormous, then permanent. The national debt begins to grow exponentially. Stage 5. The monetary expansion. To service the unsustainable debt, the central bank begins expanding the money supply at an increasing rate. At first gradually, then with increasing aggression. Inflation rises, but remains manageable, or so it seems. Stage 6. The currency war. Other nations begin losing confidence. They start diversifying away from the currency. Trade arrangements bypass it. The government responds by weaponizing the currency, sanctions, controls, financial surveillance. The currency is now a tool of geopolitical coercion, not commerce. Stage 7. The hyperinflationary spiral. Confidence collapses. The central bank loses control. Money supply expansion accelerates into the realm of the absurd. Prices begin doubling monthly, then weekly. The velocity of money skyrockets as people desperately try to convert currency into anything real. Stage 8. The reset. The currency dies, sometimes officially, sometimes through de facto abandonment. A new currency emerges, often backed by gold again, at least initially. The cycle begins anew. Let me show you how this played out in history, and then I'll show you where we are today. In 1789, France was the most powerful nation in Europe. The French livre was respected globally. Then came the Revolution, and with it, catastrophic expenses. Stage 1. For centuries, the livre had been tied to precious metal, gold and silver coins with actual intrinsic value. Stage 2. The crisis arrived in 1789. Revolutionary France faced bankruptcy. On April 17, 1790, the National Assembly made a fateful decision: issue paper currency called assignats, initially backed by confiscated church lands. Stage 3. By 1791, the assignat became pure fiat currency, no longer redeemable for land. The government could print at will, and it did. Stage 4. Within 2 years, government debt exploded. The printing press became the solution to every fiscal problem. Issues of assignats increased from 400 million livres in 1790 to 2.5 billion by 1792. Stage 5. By 1795, over 40 billion assignats were in circulation. Prices had risen 100-fold. A pound of bread that cost 2 sous in 1790 cost 225 sous by 1795. Stage 6. Foreign trade collapsed. No one would accept assignats outside France. The government imposed currency controls and price controls. Both failed spectacularly. Black markets flourished. Stage 7. In 1796, hyperinflation reached its peak. Assignats traded at 0.5% of face value. People used them as wallpaper. The joke at the time, it's worth less than the paper it's printed on. Except it literally was. Blank paper cost more than printed assignats. Stage 8. The assignat died officially in 1796. The government introduced a new currency, the mandat territorial, which collapsed within months. Eventually, France returned to metal-backed currency, the gold franc of 1803, from gold standard to worthless paper in just 6 years. Now watch this same pattern unfold in America. Stage 1. The gold standard era, 1879 to 1933. For over half a century, the US dollar was as good as gold. Literally, $1 equaled 1/20th of an ounce of gold. You could walk into any bank and exchange paper for metal. This wasn't ancient history. Your great-grandparents lived in this era. Under this system, the federal budget had to balance. Inflation was near zero. In fact, prices in 1913 were roughly the same as in 1879. 34 years of price stability. The dollar held its value across generations. Stage 2. The crisis that broke the link, 1933 to 1971. The Great Depression arrived. On April 5, 1933, President Franklin Roosevelt issued Executive Order 6102, making private gold ownership illegal. Americans had to surrender their gold to the government at $20.67 per ounce. Once the government held the gold, it revalued the dollar to $35 per ounce, an immediate 40% devaluation. The domestic gold link was broken. Americans could no longer convert dollars to gold. But internationally, the Bretton Woods system maintained a fiction. Foreign governments could still exchange dollars for gold at $35 per ounce. This made the dollar the world's reserve currency. Every other currency was pegged to the dollar. The dollar was pegged to gold. This hybrid system limped along for decades, surviving on American gold reserves and global faith in U.S. economic dominance. Then came Vietnam, guns and butter, Great Society programs, and jungle warfare. The fiscal pressure became unbearable. By 1971, foreign governments were redeeming dollars for gold at an accelerating rate. The U.S. gold stock, which peaked at 20,000 metric tons in 1957, had fallen to 8,100 tons. At the rate of redemption, the vaults would be empty within 2 years. On August 15, 1971, President Richard Nixon appeared on television and announced a temporary suspension of dollar-to-gold convertibility. 54 years later, that temporary suspension remains in effect. Stage 3. The fiat transition, 1971 to 1980. The dollar was now pure fiat currency, backed by nothing but government decree and economic might. Initially, this seemed manageable. The U.S. was still the dominant global economy. The petrodollar system, established in 1974, created artificial demand. Oil was priced exclusively in dollars, forcing every nation to hold dollar reserves. But cracks appeared quickly. Inflation, which had averaged 1.4% in the 1960s, jumped to 7.1% in the 1970s. The purchasing power of the dollar began its long, grinding decline. Stage 4. The debt acceleration, 1980 to 2008. Without gold discipline, debt became the defining feature of American fiscal policy. In 1980, the national debt stood at $907 billion, 32% of GDP. By 2000, it was $5.7 trillion, 55% of GDP. By 2008, on the eve of the financial crisis, it reached $10 trillion, 64% of GDP. These aren't just numbers. They represent a fundamental transformation in how America finances itself. Deficits became permanent. Debt became structural. The federal government spent more than it collected not during emergencies, but as standard operating procedure. Stage 5. The monetary expansion, 2008 to 2020. The 2008 financial crisis opened the floodgates. The Federal Reserve, facing systemic collapse, did what every central bank does in Stage 5. It printed. In 2008, the Fed's balance sheet stood at $870 billion. By 2014, it had expanded to $4.5 trillion, a 400% increase in 6 years. This was unprecedented in American history. They called it quantitative easing. In every previous currency collapse, it was called printing money. Between 2008 and 2019, the money supply, M2, grew from $8 trillion to $15 trillion. Inflation remained mysteriously low, or so the official statistics claimed. In reality, asset prices exploded. Housing, stocks, bonds. The inflation was there. It just appeared in different categories. Then came 2020. COVID-19 provided the justification for the most aggressive monetary expansion in human history. In just 18 months, from March 2020 to September 2021, the money supply increased from $15.4 trillion to $21.7 trillion. 40% growth. In 18 months, more money was created in that span than existed in the entire U.S. economy in 2008. The national debt crossed $30 trillion in 2022. It's now approaching $36 trillion and growing by roughly $1 trillion every 100 days. Stage 6. The currency war, 2014 present. This is where we are now, and the signs are everywhere. After Russia's annexation of Crimea in 2014, the U.S. weaponized the dollar through financial sanctions. Russian banks were cut off from SWIFT, the international payment system. Russian dollar reserves were frozen. The message was clear. The dollar is not just money, it's a weapon. In 2022, after the invasion of Ukraine, sanctions escalated to an unprecedented level. Over $300 billion in Russian central bank reserves were seized. For the first time in history, a major nation's savings were confiscated. The world watched and learned. China accelerated its de-dollarization efforts. Bilateral trade agreements bypassing the dollar proliferated. The Shanghai Petroleum Exchange began trading oil futures in yuan. The BRICS nations, Brazil, Russia, India, China, South Africa, began discussing alternatives to dollar dominance. Saudi Arabia, America's most crucial petrodollar partner, started accepting yuan for oil sales. This was unthinkable 5 years ago. The 50-year petrodollar monopoly is fracturing. In 2023, central bank gold purchases reached record levels. 1,037 metric tons, the highest in modern history. China and Russia are hoarding gold while quietly reducing dollar reserves. They're preparing for Stage 7. Global dollar reserves, which peaked at 72% of total foreign exchange in 2001, have fallen to 58% by 2024. This is a slow-motion vote of no confidence. The U.S. government responded exactly as the pattern predicts, with coercion, not reform. Financial surveillance has intensified. Capital controls are discussed openly. The Treasury Department maintains an ever-expanding sanctions list. The dollar is being weaponized at an accelerating rate. We are deep into Stage 6. Here's what you need to understand. We have never, not once in 4 centuries of monetary history, seen a fiat currency complete Stage 6 and then reverse course. The pattern is undefeated. Every single currency that reached this stage proceeded to stages 7 and 8. Not most. Not many. All of them. Let me show you what comes next. Stage 7. The hyperinflationary spiral. This stage begins with a loss of confidence event. Something, a failed bond auction, a major trading partner abandoning the dollar, a geopolitical crisis, triggers a psychological shift. The world collectively realizes this currency is unsustainable. Foreign holders dump dollar-denominated assets. Treasury bonds, once considered the safest investment on earth, become toxic. The Federal Reserve faces an impossible choice: allow interest rates to skyrocket to attract buyers, or monetize the debt directly by printing money to purchase government bonds. They always choose the latter. What happened in France took 6 years. In Weimar Germany, it took 3. In Zimbabwe, 18 months. The velocity matters less than the inevitability. The mechanics are straightforward. As confidence collapses, the velocity of money accelerates. People spend dollars as quickly as they receive them, knowing they'll be worth less tomorrow. This accelerates inflation, which accelerates spending, which accelerates inflation. A self-reinforcing death spiral. Prices begin rising not annually, but monthly, then weekly, then daily. Workers demand pay raises every week. Stores change prices hourly. People convert dollars into anything tangible: food, fuel, property, foreign currency, gold. The government responds with price controls. They fail. Black markets explode. The official economy shrivels. Shortages become endemic. Social trust disintegrates. A currency is, at its core, a shared belief system. When that belief dies, the social contract frays. Historical examples show this phase produces political instability, sometimes revolution. Stage 8, the reset. Eventually, the currency dies, sometimes through formal abandonment. The government declares the old currency worthless and introduces a new one, often at an exchange rate like one new dollar equals 1 trillion old dollars. Sometimes through spontaneous replacement. The population simply stops using it, adopting foreign currency or barter. The tragedy is that the reset always involves a return to sound money principles. Gold backing, fiscal discipline, balanced budgets. The very constraints that were abandoned to enter stage 2. France returned to gold in 1803. Germany introduced the Rentenmark backed by land in 1923, then the gold-backed Reichsmark in 1924. Zimbabwe abandoned its currency entirely in 2009, allowing foreign currencies to circulate freely. The cycle completes, and inevitably, a century or two later, the temptations of fiat currency return and the 8 stages begin again. Where does this leave the dollar? The United States is not France in 1789. It's not Weimar Germany or Zimbabwe. America remains the world's largest economy, with the most powerful military and the most innovative technology sector. These facts buy time. They do not break the pattern. The dollar's unique position as the global reserve currency extends the timeline, but intensifies the ultimate reckoning. A reserve currency collapse doesn't just destroy one economy. It detonates the entire global financial system. That's why Stage 7, when it arrives, will be unlike anything in modern history. There is no precedent for the collapse of a truly global reserve currency. When the British pound lost reserve status after World War II, the dollar was waiting to take its place. When the dollar goes, there is no ready replacement. China's yuan isn't freely convertible. The euro is a political construct governing 20 disparate economies. Gold cannot scale to modern transaction volumes without a complete restructuring of the financial system. The transition will be chaotic. Consider what happens when treasury bonds, the risk-free asset underpinning the entire global financial system, become risky. When pension funds holding $30 trillion in dollar-denominated assets face insolvency. When the $25 trillion repo market, which relies on treasuries as collateral, seizes up. When trade between nations requires alternative payment rails that don't yet exist at scale. The U.S. national debt is now $36 trillion and growing by $1 trillion every 100 days. Annual interest payments exceed $1 trillion, more than the defense budget. At current trajectories, interest payments will consume 30% of all federal revenue by 2030. This is mathematically unsustainable. Everyone knows it, but the political will to address it doesn't exist. Because the solutions are politically suicidal. Slash spending, raise taxes, accept a severe recession to break the debt spiral. So instead, we continue to stage 7. Not because we want to, because the pattern demands it. Because every government in history, when faced with this choice, chose the same path: print, borrow, extend, and pretend, until the system collapses under its own weight. The question isn't whether the 8-stage pattern will complete. The pattern is a law of economic nature as reliable as gravity. The question is timing. Will stage 7 begin next year? 5 years from now? 10? The exact trigger is unknowable, but the direction is certain. So what do you do with this information? First, understand that this isn't a political issue. It doesn't matter whether you prefer Republicans or Democrats, capitalism or socialism. The currency death spiral transcends political ideology. It's a pattern embedded in human nature. The temptation to spend now and pay later, to fund present desires with future obligations, to believe that this time is different. It never is. Second, recognize that official narratives will deny the pattern until the very end. In France, government officials insisted assignats were sound even as they traded for 1% of face value. In Weimar Germany, economists blamed external factors, reparations, foreign speculators, rather than money printing. In Zimbabwe, Robert Mugabe blamed sanctions and saboteurs. The institutions responsible for the crisis will never admit the crisis exists until it's too late to matter. Central bankers will speak of transitory inflation and soft landings. Politicians will promise that spending can continue indefinitely. Mainstream economists will produce models showing sustainability. Do not believe them. Believe the pattern. Third, act on this knowledge prudently. The timing of stage 7 is uncertain. It could be years or even a decade away. Structuring your life around an imminent collapse would be a mistake. But preparing for the inevitable is wisdom. Understand hard assets. Gold has served as money for 5,000 years because it cannot be printed, debased, or politicized. It has preserved wealth through every currency collapse in history. That's not superstition, it's empirical fact. Understand decentralization. The coming reset will create opportunities for alternative currencies and payment systems. Technologies that bypass centralized control will increase in value and utility. Understand self-sufficiency. Hyperinflation destroys supply chains and creates shortages. Skills, tools, and resources that reduce dependence on fragile systems become invaluable. But beyond personal preparation, there's a larger responsibility: spreading this knowledge. The pattern is invisible to those who don't know history. Most people trust that experts are managing the system competently. They're not. They're executing stage 6 of a script written by human nature itself. The more people who understand the 8-stage pattern, the more pressure exists to break it. Political movements can force fiscal responsibility. Social awareness can demand return to sound money principles. It's possible, barely, that enough people recognizing stage 6 could generate the political will to prevent stage 7. History suggests this is unlikely, but not impossible. What is certain is this: currencies die when faith dies. And faith is dying in real time. Watch the signals. Watch central bank gold purchases. Watch bilateral trade agreements abandoning the dollar. Watch inflation statistics divorced from reality. Watch the debt clock ticking upward by trillions. Watch foreign governments diversify reserves. The 8-stage pattern is not a theory. It's a framework derived from 4 centuries of monetary history. Stage 1 through stage 6 are not predictions. They're completed historical fact. Stage 7 is coming. Not because I say so, because the pattern says so. And the pattern is undefeated. You now possess knowledge that most people will never see. A pattern invisible to those trained to trust institutions rather than history. The 8-stage currency death spiral has played out dozens of times across centuries and continents. The actors change. The script doesn't. The dollar has completed 6 stages. 2 remain. The question isn't whether the pattern will complete. The question is what you'll do with the time before it does. The pattern is clear. For those willing to look, here's the truth. The 8-stage pattern is undefeated across 4 centuries. The dollar has completed 6 stages. 2 remain. You now see what most will never recognize until it's too late. Subscribe to this channel right now. Because the patterns of empire collapse, revolution cycles, and market crashes are all accelerating simultaneously, and we're decoding every single one. The next crisis won't wait for you to catch up. The pattern is clear. For those willing to look, hit subscribe.